Hello everyone, this is Big Money Chasing Big Money by Grid Trading on Bitget. This video is a follow-up to my previous one about grid trading on Bitget. At the time, the product was still early in its development cycle and a lot of new features have been introduced since. I will show you how my grid has been going since I launched it back then, and I will also take a closer look at the more advanced functions that are available now. If you want to learn about Bitget's grid trading system more in detail, get to know the pros and cons of using it, this video is for you. If you watched my basic tutorial video about grid trading, you might remember that I referred to Bitget's solution as one of the best out there simply because of the zero fee policy that was in effect on spot trades. With this, it was easily outperforming any other gridbot system that were available at the time. However, not so long ago, Bitget announced that the party is over, spot fees are back. This forced me to reconsider my grid that was running since I launched it for the sake of demonstration during the making of the previous video. At the time, I launched a grid for Cardano and it was going quite well according to expectations, despite the fact that the price action of ADA was not very exciting. However, as the spot transaction fees are back on the menu, I just closed it a couple days ago simply because the profitability was not as attractive anymore as it was with the free trading policy, and also the daily RSI indicator was showing that there is a chance that the local top was reached, and I didn't want to risk dipping too much in case we will have a major correction in the coming days or weeks. Just to give you an idea, I launched the grid for the previous video on October 23 and it was running for a solid 109 days. It was closed eventually on February 9. During its operation, it generated 13% in profits, which equals 43% APY, which is not bad at all, especially considering that the price of ADA has not moved a lot. Now, that was the past. Since then, there have been major upgrades implemented to the system. Now there are a lot of different options to choose from, and I will give you a quick tour of what can be done and how profitable each approach is. I will take a look at spot, futures, and DCA bots. First of all, let's see the new things about Spot Grid. As you can see, a lot of new asset pairs have been introduced, so there is a wide range of assets that you can build a grid on. The basic strategy panel has not changed too much. It still does a 7-day reverse calculation of annual profit estimation, which is a questionable approach but quite common on the market. The new thing here is the full screen mode, which is actually the advanced mode. This shows everything to you in one bigger panel. Too bad the price action graph is blocked in this view. It doesn't add or remove any extra features, it's just a more focused view on the same thing. I still believe the best thing to do on Spot Grid remains to approach it from the RSI perspective, meaning that when the daily RSI is in oversold territory, that is a possibly good time to set up a grid. This method has been working for me quite some time now, and I did not find a better one yet. If you guys have any other ideas, feel free to drop a line in the comments and we can discuss. Now, since the spot fees are back, the grids shall be set in a wider spreading distance. My personal rule of thumb here is that the profit per grid should not be really lower than 0.5%, but ideally my preference would be around 0.75% just to make sure that it has some good profitability. Again, spot grid trading works best if there is a solid asset with a decent market cap that has some price swings up and down within a well-defined range. This of course takes some time to research, but there are such assets. To give you an idea, TRX or XMR are good examples here. Unfortunately, Monero is not available on Bitget in the spot section to trade. There is also an option to do a reverse grid, which is supposed to be the equivalent of a short grid. The only difference here is that the base asset is crypto and not USDT, and it produces profits as the price goes down of the given asset. I never really used it, to be honest. Now, in terms of profitability, In my experience, a grid which is timed well and applied on a suitable asset can generate about 80 to 90% profit on average per year. Now, the risk lies in major unforeseeable events which can easily happen in the world of crypto. As far as the time frame goes, I would usually say that a decent grid should run from at least 3 months to a year or even more depending on the market dynamics. A spot grid is really for those who wish to use a set and forget type of investment and have some skills in analyzing charts on higher time frames. Now let's move on to the futures grid. Normally, I would never touch futures in grid mode. The underlying risk is just too much for me. However, if there is a comfortable budget to accommodate the strategy, then I would apply 2x leverage and never ever more than that. I mean, I had a 2x grid on XRP in the past, it was going well, produced some nice profits, but I remember when it was running, I was happy it was only 2x and not more. The other advantage is that there is an option for a short grid, which is much more logical than the spot version's reverse grid. If you consider that a local top has been reached and the price is going to move down, then you can capitalize on that as well. It's a simple approach. Instead of buying the dips, it is selling the tops. As for the settings, I usually apply the same principle as with the spot grid, except I need to consider the leverage as well. This means that the minimum profit per grid shall not be less than 1%, but ideally it would be somewhere between 1.5 to 2%. One thing to remember here is that the grids are based on orders once the strategy is launched. It means that if I have 1,000 USDT in my futures account and I set up a futures grid with the value of 500 USDT, that 500 will be logged in orders, but in case the price drops out of my grid, there would be a need for more than that. What I'm trying to say is that I would never allocate 100% of futures budget to a leverage grid, as it is quite possible to get into major drawdowns in case of some unexpected market event. So this type of grid cannot really run in a set and forget type of operation, or maybe if you have a huge budget and only allocate a smaller portion to it. But generally speaking, you need to keep an eye out for the price action and how it operates on a regular basis. Provided that the future grid is well set up on a suitable asset, it can generate quite hefty returns, but it all comes at the price of elevated risks. Bigger rewards come with bigger risks, you already know that. I would only use leverage grid if the time frame I'm planning on is rather short, meaning that it doesn't exceed a couple of months. My last futures grid was on XRP, as I said. It was good and lucky, made some nice profits and closed in time too. It was running for almost a month and generated 20% profit in the meantime. Apart from the normal grids that you can set on spot and futures, there is an option now to start a DCA grid too, both on spot and futures, and you also have the normal and the reversed versions of the same thing. Now, DCA or dollar cost averaging is a term used in traditional investments where you invest into an asset that you are strongly committed to, and even if the price falls, you just use that opportunity to buy some more of it, bringing the entry level to a lower average than you originally had. To give you an example, let's say I'm bullish on Bitcoin as I firmly believe in its fundamentals, and I see a bright future ahead. Despite the seasonal downturns and headwinds, in a dollar cost averaging approach, I would set up buy orders in case the price went down from my original entry level. So imagine this. I entered BTC at 20k with $500. When it dropped to 18k, I bought another $500 worth of BTC, and therefore my average entry price became 19k. This is in case I set up my DCA strategy in a linear method. However, I can also use bigger chunks of buy orders to make sure the deeper the price goes, the better average entry I will have. Now imagine the price dropped further down, so I used the opportunity to buy some more at 16k, but now with $1,000. my average entry has just become 17,500. At 15k, I bought for 2,000, so my average entry went down to 16,250. It is almost like a manual martingale strategy. The good news is that this can be configured in DCA bots. The terminology used can be a bit confusing, so let's see what is what. In the Quick Create menu, the base order price is basically the entry price. If I want to start a DCA grid immediately, this would be a market order at market price. Every other averaging order is referred to as safety order. Now, the safety order calculated by this option shows you how the grid distances would be calculated, counting from the given average price or the previous order. Price of the safety order drops. This shows the distance basically between the grid lines. Interval multiple of the safety order price. Here you can set up if a grid shall have a multiplier built in between its lines. Let's say you set it at 2x, then the first safety order would be at 1%, the second at 2%, and the third at 4% distance from the previous one, and so on and so forth. Multiplier of safety order amount. Here you can configure the increase of the lot sizes that you want to allocate for the safety orders. Basically, you can set the martingale parameters here. For example, your entry lot size is $10 and you set this multiplier to be 1.5x. Then your first safety order will be $15 in value, and the next one will be 22.5, and the next 33.75. So you get the idea. The max number of safety orders, this is the number of averaging grid lines. Reference for take profits. Here I can set the profit reference for take profit orders. Let's say I set my TP to be 10%. It makes a serious difference if that 10% is calculated from my entry volume, which was $10 based on the previous example, or it's calculated from the other one, which is 81.25. The first option is of course safer, having a bigger chance to hit TP, but the second option brings more profits to the table. Target profit, this is the take profit percentage, and here is the stop loss. As you can see, this tool is far from being a simple DCA bot. You can actually configure a pretty neat DCA/martingale hybrid, which can be a rather powerful weapon. Some of the professional traders also utilize something quite similar when trading, although I am sure with a much more sophisticated scripted version. It is very difficult to estimate a general profit expectation here, as this can really be set up as a simple DCA for optimizing average entries on a long-term holding position, and it can be also used as an advanced strategy for futures trading. The time frame really depends on what you want to use it for. It can be months or years with a simple DCA, or just a few hours in futures with a martingale approach. It is obvious that Bitget has come a long way since introducing the first grid bot. More assets, more options, a wide range of configuration possibilities are all ready for users to automatize their strategies. Another great thing about the strategy trading section is that anyone can publish a successful strategy for others to copy. I took a look at the currently offered strategies and I was not impressed at all. I guess this part of the copy trading section is still very early in its cycle, and for the time being we don't have a lot of impressive strategies to follow. To make matters worse, there are some that cost money to copy. Anyway, if I find a good entry to start a grid bot, I will publish it and make it free for you guys to copy in case you wish to jump in. I believe a good strategy should be free to follow for everyone. Asking money for something which doesn't have a guaranteed profit is just not right. Okay guys, this is all I have for today. As you can see, the gridbot section on Bitget is improving constantly. I really like the way that they are handling all this. I am not using the product every day, but as a means of diversification, it is good to have a bot running on the side. Of course, with the spot fees back now, it is not as attractive as it used to be. So for me, Pionex came back to being number one for gridbot operations. If you would like me to show you that platform too, just drop a comment below, and if there is enough interest, I will definitely make a separate video about that. Until then, take care guys, trade safe, big money out.